Welcome to The Explainer. Today, we're diving into a book that's been called, and I'm not exaggerating here, the greatest business book of all time. And we're not just talking about any old recommendation. We're talking about titans of industry, people like Bill Gates and Warren Buffett who swear by it. They've called it essential reading. So you gotta ask, right? Why is a book written way back in the 1960s still required reading for leaders today? What secrets could these old stories possibly hold for us? Well, it turns out the answer isn't about markets or tech. It's about something that never changes: people. So let's kick things off with a story of pure, unadulterated ingenuity. Our first adventure is all about an invention that completely changed the modern office forever. It's a story of creation, sure, but it's also a story of persistence against some pretty incredible odds. I mean, just try to imagine office life before Xerox. It's kind of hard, right? Making even a few copies was this slow, messy nightmare. You were dealing with smudgy carbon paper and these big, clunky mimeograph machines. Getting just 5 clean copies was a serious chore. Then one invention came along and just changed everything. And what's so wild is where this whole revolution started. It wasn't in some huge corporate R&D lab. The inventor, a guy named Chester Carlson, was a patent attorney who was just fed up with how tedious making copies was. So he worked on this groundbreaking idea in his spare time, in a tiny, makeshift lab in a kitchen above a bar. You can't make this stuff up. But look, success was anything but overnight. This wasn't some instant hit. Carlson got turned down by pretty much every major company you can think of for years. It took an incredible 22 years of just grinding persistence from that initial idea in 1938 all the way to the commercial release of the Xerox 914. So what was the payoff for all that persistence? Well, it was absolutely staggering. Investors who took a gamble on that tiny company, which would later become Xerox, saw their investment multiply 180 times over. And Chester Carlson, the guy who was tinkering in his kitchen, he became one of the richest men in America. Okay, so that's the power of ingenuity. But that's not the only powerful force in business, is it? Our next story, well, it shows the other side of the coin. It's about what happens when ambition boils over and turns into just dangerous, unchecked ego. So, let me introduce you to Clarence Saunders. This guy was a total visionary. I mean, he literally invented the modern supermarket with Piggly Wiggly. He completely changed how America shops. But, and there's always a but, isn't there? He had a huge, tragic flaw. He really thought he could take on Wall Street and bend it to his will. When speculators on Wall Street started shorting his stock, trying to drive the price down, Saunders didn't just get mad. Oh no, he declared all-out war. He started taking out these fiery full-page newspaper ads, basically calling on the public to help him fight what he called the yellow hearts of high finance. His plan was audacious is an understatement. He was going to corner the stock. The idea was to borrow a ton of money and buy up so much Piggly Wiggly stock that the short sellers would be completely trapped. See, he'd own more shares than were even available, forcing them to come crawling back to him on his terms to settle their losing bets. And for a minute there, it actually worked. He had them right where he wanted them. The stock price was soaring and the short sellers were about to get wiped out. But then, and this is the crazy part, the New York Stock Exchange itself stepped in. In a super controversial move, they just changed the rules and gave the speculators more time to find shares. And just like that, Saunders was financially ruined. He lost control of the very company he built, Piggly Wiggly, and he spent the rest of his life trying to chase that old glory, but he never quite got it back. It's a textbook case of a brilliant guy whose ego wrote a check his power just couldn't cash. Okay, from hubris to our final story, which is a really powerful lesson on ethics and the massive temptation that comes when you know something that nobody else does. So this one all started pretty quietly. Geologists for a company called Texas Gulf Sulphur are out drilling in rural Canada, right? They're looking for minerals, and they pull up this core sample. The zinc content is 8.64%. Now, to you and me, that number might not mean much, but to an expert, it was, and I'm quoting here, beyond your wildest imagination. It was a massive, massive find. So the company knew it was sitting on an absolute gold mine. And what do? Well, they keep it totally secret so they can buy up all the surrounding land for cheap. Makes sense. But here's the thing. Inside the company, a handful of executives knew about this explosive discovery, and they couldn't resist. They started quietly buying up company stock for themselves. And that one act, that quiet buying, raised this huge, fundamental question about fairness. Is it okay for someone with secret, game-changing information to use it to get rich before the public even has a chance? Well, the investigation that followed led to a landmark legal case that basically helped write the book on modern insider trading laws. And when the SEC started digging, they didn't just find one or two people. They uncovered this whole web of insiders who had cashed in. We're talking executives, geologists, lawyers, even bankers they'd tipped off. It was a whole network of people using their privileged access to make a fortune before anyone else had a clue. So, you have these three wild stories: photocopiers, groceries, and a secret mineral find. What do they all have in common? What do they teach us today? Well, when you look at them side by side like this, it becomes so clear. The most critical variable in business, it isn't the tech, it isn't the market, it's not the balance sheet. It's always, always the human element. You have Chester Carlson's ingenuity, which changed the world. You have Clarence Saunders' hubris, which led him to ruin. And you have the Texas Gulf insiders' greed, which pushed them to break the law. And that's why these stories are so timeless. Sure, the technology and the markets have changed a lot, but the core challenges, they haven't. I mean, think about it. Clarence Saunders' one-man war against short sellers, doesn't that sound an awful lot like the meme stock frenzies we see today? And the Texas Gulf scandal? You see echoes of that in modern insider trading cases all the time. Human nature is the constant. And that ultimately is the big takeaway from business adventures. It reminds us that, yeah, understanding finance and markets is important, but understanding people, that's absolutely essential. It leaves us with this huge, critical question that every single leader has to grapple with. Where is that line between powerful, world-changing ambition and just destructive hubris?